Live from Bloomberg's world headquarters in New York, I'm Isabel Lee.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Here's what's at stake today. Digital detectives are still assessing the damage from the Bitcoin cold wallet hack that's left many in the industry with sleepless nights.
In just a moment, Galaxy Digital's Alex Thorn will join us. He's the de facto public face of the effort to unravel the hack damage.
And we dig into the state of security for cold wallets with Ian Rogers, Chief Human Agency Officer at Ledger, competitor to CoinKite, the company at the center of the hack.
That's all ahead over the next hour right here on Bloomberg Crypto. First, as we always do, we got to check out and see where things stand with Bitcoin. It's kind of holding steady around $60,000 range, in the low $60,000, as it's really done over the past couple of weeks. In the last 2 days, down about 2.5%. Look, the industry is dealing with the fallout of that cold card hack, and we're not seeing any catalyst to move Bitcoin one way or the other. Strategy, though, on my radar, down 4% over the last couple of days. This company, formerly known as MicroStrategy, sold $108 million of Bitcoin and 6.6 million common shares. It's worth around $653 million. It's bolstering its cash reserve. It's a day when Strategy we thought would never sell any at one point, and it is doing it. Also, Trump Media and Technology, also lower. Shares over the last 2 days down about 10%. It reported a second quarter loss of $238 million. It was driven by plummeting prices of those cryptocurrencies that it owns, Isabel.
Tim, and I'm watching another big stock mover today. So Bitcoin miner and AI compute ledger Riot Platforms, the company just landed a $9 billion plus deal with Anthropic to provide data center capacity for AI. You look at the stock here, it's kind of popping nearly 4%. And if Anthropic sticks around, that deal, Tim, could eventually grow to $16 billion.
All right, well, back to the hack that has the crypto community just reeling. It was a breach involving cold card wallets made by CoinKite that drained an estimated $130 million of Bitcoin from about 7,300 wallet addresses. Alex Kam is Galaxy Digital's head of research. He's spoken to dozens of victims. He told Bloomberg that he was struggling to sleep and was, quote, physically ill last week amid efforts to mitigate the fallout from the hack. Alex joins us now. Alex, good to see you. I know you've spoken in the past couple of weeks to about 100 or more of these victims. What have they told you about what they've lost?
Yeah, hey, Tim. Hey, Isabel. Thanks for having me back. Very tough conversations with these folks. These are people that did everything right? They didn't accidentally lose their keys. They weren't, trading deep down the risk curve in DeFi, chasing yield. They were saving their money in Bitcoin, sending it to their cold storage where they thought it was safe. And it turned out not to be. I've heard terrible stories, Tim, people losing their life savings, people who couldn't get back to their device to rescue the funds because they were camping or their wife was in labor. All manner of the saddest stories you could think of, Tim.
So in your conversations, Alex, do you think that we're anywhere close to knowing the true scale of losses, or do you think we're still in the early stages?
I think we're close to knowing the true scale of losses. The acceleration in identifying lost victim funds, stolen victim funds, the growth has slowed, right? So I do estimate that it'll be over 130 million when all is said and done, where I have it now at about 12 million in directly confirmed, either because the victims themselves have confirmed those exactly, or because confirmed victims' funds were co-spent into the same attacker address. So it is still rising. Victims are still coming forth. The nature of this attack is very different than other crypto attacks. Without victim reports, we cannot find all of the attackers, right? The funds are not flowing from one centralized point and then we have to trace them downstream. We also have to trace upstream because the funds are sitting, across many distributed wallets that have never interacted with each other yet.
Alex, you've been in this industry for pretty much your entire career, and you've seen a lot. You've seen, the Mt. Gox hack, for example. You've seen the fallout from SBF and FGX. You've seen the approval of spot Bitcoin ETFs. You've seen what the Trump administration has done with Bitcoin and with digital currencies. Where does this particular hack or this particular instance sort of fit within the context of the life of Bitcoin?
Well, it's particularly devastating, like I said, because of the cultural demographic of those who are affected here. You take Mt. Gox or FTX as examples, Tim, like those at least still tragic, but at least those were people who knowingly sent their funds to the third party, right? Again, these people who lose money in their cold card self-custody wallets largely are not speculating. They are working hard every day, buying Bitcoin over time. The average dormancy of coins that was stolen is about 4 years, right? It's not, they didn't just buy it and do something risky. The median loss here among reported victims is 1 Bitcoin. And many of those people are telling us it's their life savings. So I don't know exactly where it fits. It's a tough question in the never-ending saga of Bitcoin and blockchains, but it is a particularly unique blow to the core of the philosophy because it involves secure self custody and self storage. And I know you're talking to the guy from Ledger later. This does
Ian
not
Rogers
affect
in a minute.
Yeah, this vulnerability does not affect all hardware wallets, by any means. It is specific and isolated here. But I think just the nature of it has the Bitcoin community reeling, and it will damage the near and medium term argument and narrative for self-custody.
Yeah, I'm sure Ian is going to make that point with us with regard to Ledger. Alex, you got me thinking about this sort of existential question about Bitcoin and whether it really goes at the narrative around this. You said, at least in the short and medium term, people are going to be reeling, but is there long-term damage from this that turns people off to it?
I think it's going to survive. Bitcoin has such a compelling story for those that believe in it. I actually think the long-term impact will largely be positive. You have developers coming together from across the ecosystem, utilizing the most modern AI technologies to red team Bitcoin open source software at scale. I think some lessons have been learned here about, Bitcoiners like to say often, don't trust, verify. I think it's very clear that not enough verification was being done, and that's being forcefully corrected here at scale. So I think you'll get better education out of Bitcoin influencers about how to self-custody safely. I think you'll see Bitcoin community be less judgmental against those who choose not to self-custody, and they won't be derided as not being pure enough in the Bitcoin philosophy. And I think you'll see a substantially increased amount of money and effort spent to evaluate code bases for vulnerabilities.
You've been able to follow some of this Bitcoin on-chain. How much of this can be realistically recovered or frozen once attackers start moving it off-chain and maybe to other services?
Yeah, that is a tough question. It is hard to follow because of the disparate nature of self-custody storage. I would say, by our count, about 90% of the stolen funds are currently sitting inert, unmoved from attacker addresses on-chain. Some has started to trickle, especially from later waves of attacks, into things like bridges and exchanges, where it gets a lot harder to track. In terms of the percentage chance of recovery, we don't quite know. I would say it is probably pretty low, but there have been many instances where Bitcoin was stolen and sat for a long time unmoved, even 5 years. If you think about the Bitfinex hack, sat for like 5+ years before eventually being recovered almost in full. That's the effort that we're undertaking, is to widely propagate the attacker on-chain addresses to centralized intermediaries like brokerages and crypto exchanges, federal law enforcement, so that if the funds ever do flow to a centralized point, they can be frozen and hopefully recovered for the victims.
And we do appreciate you pointing out the fact, Alex, that this isn't it's not widespread, it's not everyone being affected. But I'm curious, when do you think, at what point do we stop calling this a hardware wallet exploit and start calling it maybe a systemic failure in the way people view self-custody in the Bitcoin world?
I don't think you're going to get there. I mean, it's a reasonable question, though. You're not the only one asking it, Isabel. This, again, not just because this was a hardware wallet vulnerability generally, but this company, CoinKite, was widely thought to be one of the most secure in sort of the deepest pockets of Bitcoin culture. So I think you really need to see Bitcoin culture evolve here and account for the risk that people took when they didn't think they were taking any. So it's honestly, it's too early to tell, but I don't think this is a Bitcoin vulnerability at its core. I think the price of Bitcoin over the event, I mean, last week throughout the event, Bitcoin was rising. You had strategy selling and this cold card attack, and Bitcoin rose modestly last week. Even today, it's holding in the same sort of unmoved range. It's the tragedy of the people, I think, and the damage to the core philosophy that is most notable. 112 million. It's not that big of a blast radius as far as the market's concerned. And when we talk to institutional investors, people are concerned and upset to hear about it, but almost none of them are affected.
Alex, it's always great to check in with you. Appreciate your time. And we're going to stay on this story, and we hope you come back and join us with any updates. Alex Thorn over at Galaxy Digital.
Thanks.
Well, coming up, we're going to discuss how this latest hack is even possible. Ian Rogers from the hardware crypto storage firm Ledger is joining us in just a minute. And to access all the latest data and news on crypto, all you got to do, check out CRYP Go on the Bloomberg terminal. This is Bloomberg. The cold wallet Bitcoin hack is raising a big question for crypto investors. If even an online wallet can be targeted, how safe is your crypto? That's a question we'll pose to one of the biggest names in hardware wallets. Ledger's director of product security says, quote, if the cryptography is correct, cold storage is still the best solution. We've got Ledger Chief Human Agency Officer Ian Rogers joining us from Paris. Ian, new title, used to be Chief Experience Officer, now you're Chief Human Agency Officer. I've never spoken to Chief Human Agency Officer before. We're going to get to what your title means in just a few minutes. But first, I want to talk to you about this latest hack. As we just heard from Alex Thorn over at Galaxy, he referenced your product and he said, not all cold storage is at risk. Why would this not happen, in your view, to Ledger's products?
Well, this is, for us, this is threat number one that you take that you consider when you're looking at securing your product. You know, what happened in this case is that they had a vulnerability in their firmware that basically stored the Bitcoin over too small an address space that was small enough that that an attacker could effectively explore that whole address space and find those addresses. We actually found a similar bug in the Trust Wallet back in 2022, and we went through the responsible disclosure process and helped them move those customers to safety through finding it. I think that what this is really pointing to is how these attacks are different in the age of AI, when you simply have a lot of firepower, and I mean engineering firepower or programming firepower, to go and find issues like this. So for wallets such as Ledger, we actually do that with what's called entropy. That's done in hardware using special secure hardware. And then it goes through a certification process that specifically targets that entropy to make sure that it does exactly what it says. There's no software fallback on that. It happens on the chip in hardware, and it effectively gives you an address space with the number 3 with 67 zeros behind it, which is more than sufficiently large to avoid an attack like this, where that's simply not the case in this vulnerability that was exploited last week.
So Ian, the big question here is whether people are drawing the wrong conclusions from this hack. Why shouldn't investors take away that this is evidence that hardware wallets and maybe self-custody is inherently risky?
I mean, to me, this is, any crypto that's anywhere, even if it's on an exchange, it's somewhere protected by some kind of security. At the end of the day, crypto is fundamentally a self-custody exercise. Whether that custody is in the hands of an exchange or an institution, or in the hands of the individual, the security is paramount. So I think that it would be wrong to look at this as a self-custody issue or a hardware wallet issue. At the end of the day, wherever your assets are stored, you should be interested in the level of security that's protecting them.
I want to go back to what you said about security in the age of AI, and in your view, how the potential vulnerabilities can be uncovered not just by good and bad actors more quickly as a result of AI, but also how you create protection for these assets in the age of AI. What's Ledger's approach to doing that?
Yeah, I would actually zoom out a bit and say that this is pointing to the ability for AI to find vulnerabilities in all kinds of things. So it makes sense that attackers would be targeting people with anywhere they can in the digital asset space. But we're hearing stories about attacks on the U.S. water supply, and the reality is that attacks are simply easier. Now, they've always been a concern for us. That's the business that Ledger is in. But I stood on stage saying we're moving into an agentic future, and an agentic future where we give our passwords, our credit cards, and our identities to agents is a security nightmare. I said that at the end of last year, and I didn't really get much response to it. At the beginning of this year with OpenClaw, people started saying, "Oh, I see this thing that you're talking about," and then of course we've had Mythos, and we've got Hugging Face, and now to me the cold card attack goes in that lineage as much as anything else. And I would look at this from three different angles. One, it's easier than ever for an attacker to go find these kind of vulnerabilities. Also, we're all using AI to create more code, which creates more surface area for those attackers. And then third, we are, in our enterprises employing agents, which are effectively probabilistic coworkers, who are working alongside us that have access to our secrets. And those secrets, they might just be email or Slack, but those are still secrets that we're not expecting to be shared outside of our company. So I think that this is kind of a brave new world, and from a security perspective, AI is coming at us very quickly here.
Well, maybe that's a good segue to talk about your new title, Chief Human Agency Officer. You were for 4 years at Ledger as Chief Experience Officer. You've had a background in luxury and technology. You were at Apple, helped create Beats. Your background goes back many decades into the 90s in terms of thinking about the internet and what this technology can do. What is a Chief Human Agency Officer?
Yeah, so obviously I have a proclivity for conversation starter titles. Chief Experience Officer was about improving the experience in crypto, and Chief Human Agency Officer, my focus at Ledger is artificial intelligence and the security related to artificial intelligence. Our position is that our AI security is probably a top 3 problem for humanity at the moment, and that's not for us. That wasn't an AI title. Because what is Ledger's role in that? Our role in that is keeping humans safe, protecting the secrets of humans, and keeping humans in the loop. Meaning that for us, as we say, even we've always said when it comes to crypto security, the only security is by design. And I think that that's really come up in this cold card case. The security that is a must to keep consumers secure is by design, and the very same way of thinking applies to AI security, in that there needs to be a division of labor between the secrets that our AI holds and what it's able to do on its own, and then where the security of that lives. And the analogy that I like to use is one of a 16-year-old and the car keys, right? The car keys are not in the 16-year-old's bedroom; they're with dad. And whether or not he can use the car, depends on the moment. If it's 8 a.m. on a Monday and he's driving to school, that's you could say within policy. And of course, he may do that. If it's 10 o'clock on a Friday night and he's drunk, that's outside of policy. And of course, he may not do that. But we fundamentally have these probabilistic coworkers. And whether you're working with crypto, and we have a full suite so that you can securely give an agent a wallet, but not the keys to the wallet, or anything else that an agent might do, the security around the secrets that the agent has access to is just as paramount as it is in crypto.
Ian, what a great conversation. Ledger Chief Human Agency Officer Ian Rogers joining us from Paris. Coming up, how a Trump-linked fintech firm went from being worth $1 billion to its stock trading for less than $1 a year later. This is Bloomberg. About this time last year, Donald Trump Jr. and Eric Trump, the president's two oldest sons, heralded a transaction with Alt5 by ringing the Nasdaq opening bell. They were celebrating its announcement that they were pivoting to virtual tokens issued by World Liberty Financial. They also announced World Liberty was taking a stake in Alt5. Retail investors snatched up the stock, looking to ride a wave of the new powerful connections. The company, which was worth roughly $100 million in the month before the deal, suddenly cracked the $1 billion in market value. Nearly a year later, the buzz is gone. Bloomberg Nicola White joins us following the story live from Washington. Nicola, thank you so much for joining us. So talk to us how this company went from being $1 billion to something like $12 million in just a short moment.
So right after the tie-up with World Liberty, which was much celebrated, as you saw, Don Jr. and Eric Trump rang the Nasdaq bell, just a lot of things came to the surface that previously had been undisclosed. So right after the deal got announced, the company revealed that, there's just like so much more spotlight on the company. The company revealed a previously undisclosed conviction for one of its former executives who had been charged in Rwanda on money laundering allegations. So there was that. There was just other drama with Bloomberg has reported that the founders of the payments company had gotten in trouble with the SEC a few years ago, one of them for allegedly running penny stock schemes and another for the SEC called it hijacking of shell company listings and selling basically worthless shares to the public. So there was that. And then there was C-suite turnover, auditors hired and fired, and the company's stock it's now trading well below $1. It hasn't traded above $1 since May, and the company is at risk of being kicked off the Nasdaq.
Nicola, we got 10 seconds left. How is it connected to the Trump family?
So the big deal that they did with World Liberty is the crypto platform that's tied to the Trump family, and the tie-up netted about $500 million for the Trump family, but then it ended up being a 90% rout for investors, as we have reported.
We barely scratched the surface of this story. I encourage everybody to check it out at Bloomberg.com and, of course, on the Bloomberg terminal. Nicola White joining us there from Washington, D.C. Well, coming up next, the CoinKite hack has investors question the security risks with even the supposedly safest measures taken. Bitwise manages more than $15 billion in assets. We're going to speak with Matt Hougan next.
The hack of CoinKite cold wallet is potentially moving capital into Bitcoin ETFs. You see here, this is the weekly flow of US Bitcoin spot ETFs, and they posted their strongest weekly inflow since April. You see there, $854 million. That's basically nearly $1 million. And these funds seen by some as a safer place to put money devoted to Bitcoin because big backers are supporting the ETFs. So yesterday on ETF IQ, we had Robbie Mitchnick, head of digital assets at BlackRock, and he spoke about the potential safety of Bitcoin ETFs.
What we've seen, frankly, since the start of the Bitcoin ETFs being available in January of 2 years ago was an overwhelming demand to be able to hold in a very simple turnkey trusted vehicle and not have to worry about all the unique elements of Bitcoin and crypto security that generally custody otherwise would require of an investor.
To discuss investor sentiment on Bitcoin since the hack, let's bring in Matt Hougan, CIO at Bitwise Asset Management. Matt, is this the sort of biggest, I don't want to say catalyst, but maybe advertisement for having your Bitcoin in an ETF since these ETFs were launched a few years ago?
We've certainly seen a lot of money flow into ETFs, I think in part in response to this change. I think it's a reminder that the frontier of what the safest way to store your crypto assets is always evolving. It's different today than it was 5 years ago, and it was different then than it was 5 years prior. It is true that a lot of investors find comfort in the institutional protections that come with the ETF structure. And I think that will accelerate over time. So I do think this is positive for ETF flows in the crypto market.
So it raises the question, Matt, what is the safest way to store your Bitcoin right now?
Well, look, there are a number of good quality ways to store your Bitcoin. I do think ETFs and Bitcoin ETFs, we have an ETF, BITB, come with a lot of protections that investors find comfort in. They're at regulated, qualified custodians. They have some element of insurance in place. Passwords are sharded. There are limitations on where the Bitcoin can be sent and how it works. There's a long track record of protection. So I do think ETFs are a great solution. That doesn't mean there aren't other ways. There are still good cold storage solutions that many love to have available to them. But I think increasingly you're going to see, particularly mainstream investors, turning to the protections of ETFs as one safe way to store their assets.
Matt, does this challenge the whole idea of self-custody? Because for years, the Bitcoin community has been saying, put all your Bitcoin or most of your Bitcoin in a cold wallet because that is the safest way.
Yeah, I don't think it challenges the idea of cold storage and self-custody. You still have that option available to you, which is the really important thing. You can opt out of the system. This was a product failure. It's not a failure of cold storage and self-custody itself. I would emphasize, I think it's a reminder that the frontier of the most established and preferred way to store your Bitcoin is always evolving, and many investors want to be on that frontier. But make no mistake, it doesn't change anything fundamental about Bitcoin. We still have this important opt-out mechanism where investors can sort of leave the mainstream finance when they need to. But most of the time, you're going to see much of the assets and probably an increasing share of the assets in regulated products like BITB.
And when this hack happened, we barely saw a budge in the price of Bitcoin. Talk to us whether we're seeing a real separation between Bitcoin and the broader ecosystem of digital assets when a hack like this isn't even moving the price of the stock. I mean, maybe is this at the point where hacks don't necessarily undermine investors' confidence in Bitcoin?
Well, I think there's an element of that, but I actually think there's a bigger story going on. We've seen over the last few months that negative news hasn't harmed Bitcoin at all. When Michael Saylor started selling Bitcoin, Bitcoin held flat. When Stretch traded down to 75, Bitcoin held flat. When the Clarity Act odds fell from the mid 40s into the teens, Bitcoin was rallying. One sign that you're at the bottom of a bear market is when an asset stops responding to bad news. In a bear market, it tends to over-respond to bad news and ignore good news. We're in the reverse right now. We're ignoring bad news. We're maybe over-indexing to good news. I think it's a sign that we may be at the bottom of this crypto winter and that we may have a strong end of the year.
So then if you think we're at the bottom and we have a strong end to the year, what would be the next catalyst in your view that could actually move this asset higher?
Yeah, I think actually it's a quiet catalyst underneath the surface, which are these large wealth management platforms. I really think that is the next marginal buyer of Bitcoin coming into the market. And that's not a 1 minute catalyst. That's something that takes place over time. You know, over the past few months, despite a market that's down 50% from its all-time high, we've seen a number of major wealth management platforms approve our spot Solana ETF, BSOL. The reason for that is not FOMO, it's merit. It's these advisors that want to be part of this asset class. I was just at a major wealth management conference yesterday. They are still extremely bullish. They're talking about 2 to 4% allocations. Look, I think this bull market is going to be slower, less volatile, and more institutional than bull markets in the past. But it's also going to be building a stronger foundation for the asset that's going to lift us higher over time.
Matt, I really like what you said earlier, that maybe what is safe is continuously evolving, especially in this age of AI. So let's say theoretically you have a client or a friend who has $1 million in Bitcoin. How would you advise them to divvy up those assets when it comes to cold storage and ETFs? And I know, of course, everyone has a different risk tolerance, different profile, but just generally.
Yeah, look, I think ETFs are a great solution for a majority of those assets. I think it's valuable for people to keep a portion in cold storage so they have that opt-out option for them, but a majority may go into ETF. I'll tell you something interesting, something we're seeing. A lot of investors with held away Bitcoin are actually in-kinding into ETFs. That means they transfer that Bitcoin into an ETF in a tax-free basis. We've done hundreds of millions of dollars of those trades from people who want to get Bitcoin into a regulated setting where it can be managed against their same assets. And again, they can do that on a tax-free basis. So, you know, the majority of that, I think, maybe for most people in a regulated setting. and then some portion in traditional cold storage, because that's fundamental to the core philosophical offering that Bitcoin provides.
It may be fundamental to the core philosophical offering in the opinion of some of those, OG Bitcoin holders, but is there actually, in your view, Matt, a reason to do that in a world of spot ETFs?
Well, look, I think the fallback protections only matter in fallback scenarios. There's probably not a reason for everyone to do that. I think it's important, as I said, that we have the option to do that. But look, most investors, most traditional investors are going to hold Bitcoin the way they hold other assets. Right now, that means in traditional wrappers like ETFs. I think as the industry matures and the technology matures and finance moves increasingly on chain, I don't know that ETFs are the end solution. We may see other solutions that look more like vaults or digital SMAs. We shouldn't assume that we're at the end of sort of history and evolution. But right now, for many investors, ETFs like BITB are the safest, most secure, and easiest option at really low costs. It's a great solution for a lot of people.
And I want to go back to your in-kind question, Matt, because I feel like that's really gaining a lot of traction, especially of late. So of the inflows coming into your fund, roughly what percentage comes in kind versus in cash?
Oh, that's a great question. I think I don't have the exact statistics in front of me, but I'll say we've done, I think it's $600 or $700 million of in-kind transactions into BITB over the past year or so. So it's a meaningful fraction. And when I go and speak at these major wealth conferences, major advisor platforms, it's a number one topic of discussion for financial advisors because it has a two-win aspect for them, right? It offers maybe a better solution for their clients, a safer, more secure, easier to manage solution. It's also a win for those financial advisors because it brings those assets inside of the relationship. I think you're going to see this, measured again in hundreds of millions and billions of dollars over the coming years.
All right, you'll have to be back and update us on that soon. Matt Hougan over at Bitwise Asset Management joining us from the West Coast. Coming up next, retail traders now have more platforms and products than ever to choose from. We're going to talk with Johann Kerbrat, Senior Vice President and General Manager of Crypto and International at Robinhood. That's next on Bloomberg. Amid all the headlines tied to the cold wallet hack, we might have missed that Robinhood this week launched cryptocurrency trading for users in the UK. It comes as Robinhood app downloads actually fell sharply in July after surging earlier this year. For the latest on retail trading sentiment, we're joined once again by Robinhood Senior Vice President and General Manager of Crypto and International, Johann Kerbrat. Johann, always good to check in with you. It's been a few weeks since we spoke, and it was before this latest hack. I want to start with how that has affected what people are doing on the platform, and then we'll get to UK expansion. So what has happened on the platform, if anything, as a result of the sentiment around this hack?
I think overall it was a fairly limited hack in terms of the number of customers impacted, and so we haven't seen a ton of changes in sentiment. We did see some deposit happening on the platform. Hard to know if it's linked to the special code wallet or not, but we are seeing more influx also in the ETF for Bitcoin, for example.
Yeah, so the same thing that we were talking about with Matt Hougan just now. So maybe an uptick in people actually buying these spot Bitcoin ETFs because they think that's a better way to hold this asset?
I think the ETF has many advantages, some that you just mentioned previously with Bitwise, but there is also a lot of customers that are wanting to hold all the assets on the platform, on the Robinhood Crypto, for example, where they have the same usability, ease of buying, selling, transfer of the crypto asset out of the platform. And we don't charge any fee for custody, for example, or anything like this. So we see a lot of customers thinking about how to maintain their crypto asset. The cold wallet situation does mean that you need to think about your custody system. You need to upgrade it. You need to make sure that it's up to date with the latest. And with the advance in quantum technologies and other type of hack like we've seen, it's important for people to understand that self-custody does not mean you have nothing to do. It means that you have to keep up to date with everything going on in the market. So I think a platform like Robinhood Crypto is a very easy solution for a lot of people where they can get all this ease of access and at the same time transfer out to their custody or to their own Web3 wallet when they want to.
That's a great point. Like self-custody does not mean you have nothing to do. Johann, Robinhood is expanding crypto internationally very aggressively. I think you have users in more than 100 countries. Is crypto becoming the main way Robinhood plans to enter markets around the world?
I wouldn't say it's the main way. We are still getting licenses in places and launching crypto and brokerage services the traditional way. So, for example, yesterday we launched in the UK crypto on our central main application. And so UK customer can now buy options, equities, futures, and also crypto all in one application. So I think, we're still looking at offering this easy to access platform to everyone when possible. But we also think that crypto can allow Robinhood to grow internationally in more countries than they will do if it was with getting a license everywhere. So we have launched our Robinhood wallet in 120 plus countries. Customer can trade stock tokens, for example, there and get US exposure to US stocks and ETF. And we think it's a great way for people that don't necessarily have an easy access brokerage or very high fee brokerage solution to actually be able to trade asset 24/7.
And I know that Robinhood has made a big bet on AI-powered trading, and you already have thousands of users. Talk to us about how comfortable you are with giving AI more control over actual trading decisions. I mean, how does that work with your clients, and also especially in a market as volatile as crypto?
Well, for us, it's really important to give accessibility to our customer, and a lot of our customers have been asking for, access to APIs, access to MCPs, being able to plug their agent into our system. And so for us, it was really important to make it available and make sure that they have the guardrails and control in place to control what their agents will do. So the customer is responsible for the agent. They are the one enabling the strategy on their side, but on the Robinhood side, they have access to tens of controls to limit the amount of money that the agent can access or the type of order that they can place. We think it's really important, and we not only build it on the centralized platform, but we also made sure that it was available on the Robinhood chain, where we have skills that are for the wallets or for trading on DEXs that any agent can use and interact with.
Johann, great insights. Thank you, Robinhood Senior Vice President and General Manager, Johann Kerbrat. Up next, our next guest says the Bitcoin hackers are likely using AI. What happens next for the victims? We'll talk with Becca Amilee, Rubenfeld, COO and co-founder of AnchorWatch, a Bitcoin insurance company. This is Bloomberg.
We are, in our enterprises employing agents, which are effectively probabilistic coworkers, who are working alongside us that have access to our secrets. And those secrets, they might just be email or Slack, but those are still secrets that we're not expecting to be shared outside of our company. So I think that this is kind of a brave new world, and from a security perspective, AI is coming at us very quickly here.
That was Ledger's Ian Rogers. Our next guest co-founded a company that specializes in insurance for Bitcoin assets, including kidnap and ransom insurance and coverage for cyber attacks. She says her firm has been investigating how AI can compromise crypto networks. We're joined by Becca Amilee Rubenfeld, COO and co-founder of AnchorWatch. Becca, thank you so much for joining us. You described it feeling like your co-founder and developers were, quote, off at war. What was happening behind the scenes, and what, in your view, made us all so urgent?
It really did feel like that. It's been an action-packed couple of weeks. What really made it feel that way is that there was a clear attack underway. So awareness of this hack on the cold card device started to be made known. There were notifications, and immediately both developers and the community at large kind of hopped to action. On the developer side, a group of developers who have been called the Red Team immediately dove in and started assessing the situation and then really building defenses we believe the hack was aided both by AI, but the defenses are also being aided by AI. So there was very much the perception that this group of several dozen developers was really out on the front lines. So it's something, it was the feeling that, you know, maybe the outer wall had breached, right, of the initial cold card hack. But additional losses would be coming. And so there was an enormous sense of urgency to both inform people who have Bitcoin on these devices, but then the developers themselves, as they started scanning Bitcoin software across the industry, helping to put patches in place and really strengthen those walls so the additional walls did not continue to fall, leading to more losses. So everybody who was not a developer and able to contribute to that effort, it really what did feel like, you know, we had sent these developers off to war and they were really fighting on our and Bitcoin's behalf, you know, volunteering their time, resources, training, tools, and all of us who work in the industry, hold assets, hold Bitcoin, really we're wishing them well, providing support, providing sustenance, backup however we could, but really they were the warriors.
If we continue the metaphor and we think what this conflict looks like a year from now as the technology just continues to get better and better, I mean, each and every day, do we have the defenses? Do these companies have the defenses to stay at least one step ahead of the bad actors?
I think that's one of the big learnings of these last 2 weeks. We have to look at Bitcoin and Bitcoin-related code as the canary in the coal mine. The reason for that is if you think about hackers having very powerful tools and the opportunity to scan open source software, public repositories of companies, they're looking for vulnerabilities. Where are they going to put their efforts? They're going to put their efforts first where there's Bitcoin on the other side, and there's a huge payday for those efforts. After that, they will continue to use these tactics to infiltrate companies kind of the good old-fashioned way, going after customer data, going for any vulnerabilities that will, at the end of the day, either be useful to steal funds or to gain information that can be sold on the black market. So I think one of the big concerns that the red team and that the Bitcoin community and industry is surfacing right now is the difference between the American models and the open source Chinese model that was likely instrumental in the initial hack. The situation that we're finding is that the open source model, the Chinese model, is effectively unharnessed. So it is not constrained in its abilities. So it can be freely used. The American frontier models, I'm talking, you know, Claude and OpenAI, Anthropic and OpenAI, they have put in safety mechanisms that say, hey, if you are using these tools to really poke at the security of code, we're going to shut you down. Okay. And our concern is that using the frontier models, if they do not allow developers to use this for our defenses, is that American companies will be at risk in the coming year.
Becca, Amilee Rubenfeld, she's COO and co-founder of AnchorWatch. You got to come back and join us again soon, Becca. We do appreciate your time.
Thank you.
That is going to do it for all of our time on Bloomberg Crypto. You got to join us again. We're going to be here same time, same place. This is Bloomberg.